Okay, in this video, I'm going to show you exactly how I backtest. Okay, so I'm going to review a trade that I took on gold on Tuesday, March 10th. So, first things first is I only execute Tuesday, Wednesday, Thursday, Friday, and I only execute at New York session. So, first things first, we're going to do the replay tool to Tuesday. Sorry, let's go to the 15-minute. 15-minute is always the better time frame because you get by 15-minute intervals. I'm going to go to 8 o'clock. Okay, right here. Perfect. So I have my trading checklist, right? So let me just input this information. So the result was a loss. I risked 0.33% or about negative $665.81. This was negative one. I was going for a 1 to 3 risk reward. Mistake. I traded out of session. I ignored the higher time frame analysis. Okay. And then my pre-trading checklist. Okay. So first things first, we're going to mark our weekly and daily zones. Okay. So first let's go to the weekly. Go to the weekly. Okay. Perfect. 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 So here we are. So this is an obvious bullish movement, but the first thing that we're going to look at is we're going to look for um, order blocks above price and order blocks below price. Okay, so the weekly is kind of what's the word I'm looking for? Not detailed enough. So we're gonna go here instead. Okay, so price is here, so the order block below it is gonna be down here. Gonna go boom, just like this. We're gonna label that daily order block. Then, so you're either gonna look for the order block above price or order block um, below price, or you're going to look for the fair value gap above price or fair value gap below price. Okay. So in this case, we see a daily fair value gap that's right here. So boom, mark that. Do weekly fair value gap, change it to daily. Let's also add this daily FVG. Perfect. Next, we're going to identify external liquidity. Okay. So that is the previous day high and the previous day low. Okay. So right here, previous day high, PDH, down here, previous day low. Okay. Perfect. So now we have our range. Okay. Boom, weekly, higher time frame direction understood. Right. Previous day, low. Okay. Now we're going to go to the 4 hour. We're going to mark the or more internal liquidity. This is still technically external liquidity that we're going to be marking. So we're looking for equal lows and equal highs. So price is up here. So this is equal lows. So this is going to be the sell side liquidity. Okay. Equal highs above price. Let's see. Okay. We could say right here, this one and this one. Okay. This one right above price. Okay, cool. Buy side liquidity. All right, cool. So now we still have our zones. Okay. Let's go to our checklist. All right, perfect. Now we're going to go to the Tokyo high and low and London high and low. Okay. So we're going to do that on the 15-minute time frame. Okay. 15-minute. Check something real quick. Okay, cool. So the Tokyo range is 19 p.m. to 3 a.m. So we're going to go 19 p.m. or 7 p.m. Okay. Tokyo open to 3 a.m. Next day. 3 a.m. Boom. Okay. This is the Tokyo low. This is the Tokyo high. Cool. Tokyo high. Okay, we can get rid of this one. This becomes London open. And 1 second, brother. Let me just finish this, okay? Just recording a video. 3 a.m. to 8 a.m. So we're going to go find 8 a.m., which is right here. This is going to be London close. Okay. Mark the bottom, which is right here. This is the London low. And this is the London high. So now our internal liquidity has been identified. London high. Okay. We can get rid of these. Okay. Let's go back to the trading checklist. Boom, boom. Okay, so now all of this is based on our entry time frame, but let's go ahead and plot the actual trade idea that we took so we can reflect and back test on it and see what we should have done instead. Okay. So what time do we enter? We entered 310, 19:05. So we took this way out of session, okay? Which is the same problem we had all week. We were trading out of session, okay? So 1900 right here. We will mark this 19. This is where we took the trade. Okay, we're going to change this. So the open price was 5196.58. Profit 5260.29. Stop was 5163.38. Okay, so this is a trade idea that we took. Okay, so this is the start of New York session, 8 a.m. and New York is going to go to 11 a.m. That's our primary time to execute. So 11 a.m. It's about right here. Okay. So now we're going to go candlestick by candlestick and we're going to see exactly how price played out. All right. Let's go. Okay, so first things first. Whoa, I didn't even see that candle. Okay, so based on what we see here, a few things happened. New York opened and we took out the Tokyo high, we took out the London high, and we tapped into the daily fair value gap. We also took out the previous daily high. Okay, so let's go a little further. Okay, so New York. Okay, keep going, approach that buy side liquidity. Let's see. Okay, look like we had some displacement here. Okay, we definitely did have displacement from here to here. So this becomes the new fair value gap. This is how we should have done it. Okay, I'm just showing you this in real time so you understand exactly how we would have taken this trade. So this becomes fair value gap right here. So our expectation now, because we took out all of our buy side liquidity, is for price to come back into here and then sell. Okay, because we have the daily fair value gap here, when we enter our primary zones above price, our expectation is price is going to go in there and show some sort of reaction in the opposite direction. Okay, so what we would do is we would put our entry right here. I would have definitely put my stop above the buy side liquidity or possibly even above the fair value gap. Okay, and then we're going to target the liquidity below us, right? So sell side liquidity, Tokyo lows, and even this low down here. But we're just going to run this 1 to 3 because that is our rule set. Okay, so 1 to 3, if we put our stop loss above the zone, would look something like this. Okay, cool. So we're going to see how this played out. This is the trade that I originally took. So we obviously have to see how this hits stop loss. And let's see if this trade idea that we should have taken is going to play out. Okay, let's zoom in just a little bit more so you can see the whole thing. Let's try and move this out the way. Okay, perfect. Click. Okay, so our original trade would have been entered right here. We would have been in profit. Okay. The reason why I thought that this trade was a good idea was because we had this bullish leg, right? But again, this is a range and this is a daily fair value gap. So, oh, well, you see, we also did break all the highs. So I'm not totally wrong for assuming that price was supposed to go bullish, right? However, because we're in this daily fair value gap, we should have expected price to react to it. Okay. Especially since we just took out the liquidity. If we're taking out upside liquidity, chances are we're expecting price to go towards the low end liquidity. Okay. So again, let's open this. Okay, perfect. Just like that, it would have tapped us into this fair value gap. So let's see how this plays out on the entry we should have taken. Okay, this is playing out. Boom. My original trade would have been stopped out, but the trade that we should have taken would have been in profit. Okay. So let's go ahead and hide this. And as you could see, this fair value gap stood the test of time, right? It formed at 2 p.m. New York session, so that's still within session, but it didn't activate until what time is that? 21, 3 hours from at about 9 p.m. Okay, is when it activated. So this would have been deep into Tokyo session. So we would have just left our entry here and then it would have brought us into the trade. But again, let's see how this plays out and let's see if this eventually makes it to take profit. Okay, so we would have been in profit and profit and profit and profit, 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 profit. We would have been holding this. Again, still holding it, still holding it. Again, this is ranging, so this wasn't, the cleanest setup. But again, let's just keep going and let's see when this hits take profit and boom, it would have hit take profit right here, which would have been Thursday, March 12th. So this would have activated Tuesday, March 10th, and we would have hit take profit March 12th, 2 days later. Okay. And that is our trading model. So as you can see, liquidity was taken out above. We hit a major point of resistance above the daily fair value gap, rejected it, created displacement during New York session. We had a fair value gap here. We would have dragged the fair value gap out. Price dipped, broke some lows, came into the fair value gap. We could have even put the stop loss above the buy side liquidity, but because buy side liquidity was here and we didn't really get it taken out, it would have been safer for us to just put our stop loss above the zone. That would have been a safe trade. But as you can see, there was absolutely no drawdown on here. So this would have been an absolutely incredible trade. And take profit was hit 2 days later. Okay. Take profit was hit 2 days later. I also see something else, right? Let's get rid of some of these lines so you can see this very clearly. Okay, so during New York session, we had divergence formed on the 15-minute. Okay, when we have divergence, that means price is going up in on our chart, and then price is going down on our RSI. So this indicates that a reversal would have taken place, and boom, just like that, the reversal took place, and the trade played out. So that is exactly how we trade. That is how we backtest, and that is how we enter positions for profit. Okay. Hopefully this helps. Make sure you like, comment, and subscribe on this video. Make sure you follow Growth Bank on all social media platforms. You can follow Growth Bank on Instagram at Growth Bank or at growthbank.ai. Follow Growth Bank on X or Twitter at growthbank_AI. And please join our Telegram where you can interact with other traders. You can get all of our trade ideas. You can watch our videos, get our trades, and pretty much have everything in your hands to become a better trader. Okay. Thank you guys so much for everything. I hope this video was as helpful as possible.